All right, guys. Market is down again today, man. Look at the Nasdaq. This is the pullback. This is the whole pullback. If we put a weekly chart up here, let's see if it continues down, guys. All right, guys. So again, are we correcting or crashing here? What are we doing? I'm about to drive in the ocean. I'll swim or something bigger than me. Yeah. So the market is down pretty big here. We're at 19.5 thousand on the Nasdaq, which is under 20K for the first time in a long time. Like, we haven't been under 20K since August of last year was the last time we were under 20. We haven't really been underneath 20 in a minute, man. It's been months and months since we've been under that level. And that's a big level. That's a big psychological level. Yeah. So, scary. Nonetheless, scary. We'll see if it continues. We'll see if the redness continues. You know, we got the JOLTS report later on today. Let me know if you can hear the music. You should be able to. Yeah, it's pretty red right now. Who posted the Top Step link? Nightbot. Why did Nightbot post it? Oh, Pawn posted it. Okay, gotcha. Yeah. It's low but hearable. Okay, I could turn it up a little bit. Let me know if that's good. We should be good. Yeah, no, that's correct, Sam. Sam says, isn't that just semantics at this point? If it's a correction, it'll ease soon. If it's a crash, it won't. Right now, it's the same for both, isn't it? Yeah, that's correct. If it's a crack, if it's a crash, not a crack. If it's a crash, it'll continue down. If it's a correction, it'll bounce back. We're down 10+% obviously now, which justifies this latest move as a correction. A correction is over 10%, and now we are effectively down over 20%. Even if we just look at the Nasdaq here, we are down from 22.5s basically, and we have dropped all the way down to 19,000. So that is a 15% drop in the Nasdaq so far, guys. It's not small. And like I said, I hate to toot my own horn, but part of this builds my confidence here. Like, I've had so many people overpredict crashes and corrections on my stream, and they've hated me and called me permabulls a lot of the time. And the one time I'm like, hey, I think we're overextended. I think we could correct or crash sometime soon. We do. And so it does build my confidence. I can't lie. And don't get mad at me. I'm not bragging. But if it was you, it would build your confidence too. You know, like, I see so many people overpredict these things. So many people on YouTube make videos like the market's going to crash, blah, 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 right? And they're usually just like wildly wrong about everything. But I was right about this one. It's the only one I've ever really done in the last, like, years. The only crash prediction I've ever made, the only correction prediction I've ever made, and I got it right. And so you love to see it. It builds confidence for sure. Definitely top 3 ever. What's up, Brian? How you doing, man? I'm not saying anything outside of Brian. No, honestly, most of the people predicting crashes were wrong. Like, they predicted crashes years ago. We're still well above where they predicted it. Like, most of them predicted crashes. Like, look, let me show you guys this. Most of them predicted crashes, just to clarify. Here is where they predicted it. A lot of them. And they were wrong. You know, they also predicted it like all the way back here, all the way back here, all the way back here. And so they're still wrong because we're above where they predicted it at. Just to put it into perspective, I called this, and I told people I stopped buying. I'm not buying. I'm not really interested in buying. I'm not going to short anything because that's just not my style. But I was talking about this in December, so literally here. And so you love to see it. When you're right, you're right. I'm going to take that credit here for this one because I got it right, I think. Question is it time to buy the dip? Yeah, that's the question. I see a lot of people talking about it in chat. That's the real question. Is it dip buying season right now? I got to wait for this to stop first, to be honest. Like, I got to wait for it to stop because the problem is that it could go to 30. And then you got to really wait to get your money back. And so yeah, I'm going to wait. I need some confirmation first. We're already down 15. Yeah, every time there's blood in the water, it's crash time. Everybody always says the same thing. I don't even know. This is a correction at this point in time. It's a 15% drop. We do another 5%, you might be able to call it a crash. 20%. Some people call it crash 20%. Some people call it 30%, 25%. It's somewhere between 20 and 30% as a crash. Short term, which definitely was what this would be. Rate cut soon? I mean, when do you think soon means? Healing. I don't think we're going to get rate cuts until at least June. And so I still think we got months before we get rate cuts. I don't think we're going to cut next week at all. I think we're going to pause rates next week. I think we got inflation data this week in between that too, and that might influence the market in a negative way if it comes in hot. Yeah. Yeah, I mean, we're going to remove this comment. I'm not sure. Just remember, though, guys, when you want to watch somebody on YouTube, you might not like me. You might think I'm arrogant. You might think whatever, okay? I was absolutely right about this. Just remember that. I was absolutely right about this. I told you guys I stopped buying in December. It was really like, again, and it's not a crazy thought to think, hey, the market's up 105%. Like, let me stop buying, right? Like, that's not a crazy thought. It just kind of goes to show, like, corrections happen, crashes happen. They don't happen every freaking month. And this definitely doesn't mean a recession yet. Like, this doesn't mean a recession. We're not in a recession yet. We need 2 consecutive losing GDP quarters for a recession to be here. We're just not there yet either. Tesla, guys, is hella weak right now, man. Look at Tesla. Sheesh, bro. This thing is down monstrously. I hate being right about this one too, man. Sometimes I hate being right because the big risk, man. Elon outspoken politically, bro. This is what dragged Tesla down. You know. Yeah, some would say I'm the 3rd most correct person ever in the world right now. Well, it's not about pre-whatever levels RMCO. It's percentage. We're at 15% right now. And so that's a correction. Correction's over 10. 15% drop in a couple weeks, that's a correction for sure. Now, if we keep dropping, it's a crash. If we get into 20s, a lot of people are going to call it a crash. And I can't argue with them either. Should I text the people I told them that we could correct? Should I text the people I told them we could correct now or later? What do you guys think? You know, they told me it wasn't possible for the market to correct. I can't remember what excuse they gave. They're like, oh, the market's not going to correct. Too much big money's flowing into it, I think they said. Should I text them now or later? And you know. They know. Yeah, they know. They know for sure. I'm just glad the stream could see it. Listen, when you're right, you're right. Y'all will never hear the end of this. I'm going to brag about this accurate. I mean, listen, this is the only crash prediction I've done in a long time. And I was right. And when you take into context of everybody else wildly over predicting crashes, the problem is that people get more views by predicting crashes, right? And so if somebody's like, hey guys, and they're certainly going to start acting like they somehow predicted this, even though we're probably above the level at which they predicted it, which means they were wrong. Okay, always remember that. If we're above the level they predicted it, they're wrong. but they get more views by screaming fire, right? So some of these guys have every 3 weeks, every month, every 2 months screamed fire, and the market is just churned up wildly. Like that's wildly wrong. If they called a crash a year or two ago, wildly wrong. Because we're just so up in the last 2 years that you're wildly wrong if you called it 2 years ago. Yeah, but that's what I told people would happen, Daniel. Daniel said there's very influential people making him look bad with Tesla. Bro, this man is poking at Bill Gates. He's poking at the richest people in the world. Of course, there's, like, what did he think would happen? This is what happens. It happens the same way on the other side as well. If you're on the other side of the political spectrum, it happens there too. And so that's what happens. That's the risk of being outspoken politically as a CEO selling things to consumers. That's the risk. That's the problem. I wouldn't be surprised to see him step down, to be honest, eventually, pretty soon. I just don't think they can both run parallel. Him being super outspoken politically and Tesla growing. I don't think that can happen at this point. Yeah, no, I've been basically parroting back and forth for the last 3 months that the market needs to correct smart film. For the last 3 months straight, I've been telling people I think the market corrects it. And the argument I would, almost verbatim what I would say is the NASDAQ's up 105% in 2 years. That's obscene. That's crazy. It's unnecessary. I'm not going to buy that. I would feel irresponsible buying that. The NASDAQ being up 105% in 2 years. I'd feel irresponsible buying that. It's just too much. The market has to correct from that. And maybe it's a bigger correction. But when you're averaging 50% a yearly 50% in 2 year period, that's way too much. The market needed to correct. And I've been saying this for freaking 3 months now. Not a shock, Hopefully, if you guys want to know, if you want to know who knows what they're talking about, watch this stream. I'm not saying I do. Definitely top 3 least knowing person ever. But we were right about this one. Yeah, whether it's only a correction is still pretty undetermined at this point, right? If we drop another 5-10%, we're definitely people are certainly going to say crashing. If we drop another 5-10%, right now we're at 15%. We drop another 5 or 10, that's 20 to 25%. That's a crash. And we got some big economic reports, not only today, but tomorrow and Thursday and next week that might stimulate this bear market even more, And so you got to just be careful right now, guys. That's what I'm saying. Yeah, Jolts report 10 a.m. Eastern time. People have to watch your live streams on the regular to understand your predictions. Thank you, Nathan. Some people know. If you've been watching my stream, y'all know. It's hard to argue against me being right about this one because I was so outspoken about it. But if you've been watching my stream long enough, you know. Yeah, all the reports, I just go by market time. And market time is Eastern time. I'm in Central time. I'm in Texas. I'm from Louisiana. I'm in Texas. I would go by Central time. But it's market time. It's Eastern time. The Jolts report is a jobs report that drops today. It's a pretty big report. It's somewhat weighted. It's not the most weighted report, but it can move markets as well. If it comes in really low and it instigates these recession fears, I think the market's going to fear low. It's back to normal where good is good and bad is bad scenario in economic data. For a while, it pivoted to economic growth was bad because of inflation fears, but I think right now it's probably the other end where if we get a lower than expected Jolts number, market's going to panic depending on how low it is. Like yesterday's, did we have a report yesterday? No. Like Friday's payroll report was slightly low. Market went down. So it depends. Bad job numbers are good for stocks because they push the Fed towards rate cuts. But I agree. We were moving in kind of number one. I'm going to preface it with I have no freaking idea about this one. Like, I don't know how the market reacts to an isolated JOLTS report. I'm not going to care too much if I'm wrong, and I think there's a lot of variance in how the market reacts to this. But I think right now, in a brutal red market, which is certainly what this is, that's dropped 15% in a couple weeks, I don't think it's a crazy thought to think that if we get a weaker economy data report, market's going to panic a little bit more and might go down more, But again, you also have to take into context the CPI report tomorrow. And so since CPI is dropping tomorrow, the market might fear inflation on that end as well, right? And so if the market fears inflation and wants rate cuts, they might react negatively to higher job openings in the JOLTS report. That's possible as well. And that's kind of been a dynamic that we've seen over the past couple months off and on. But I think you got to take the context of like the recession fears into the market right now. And I think you got to understand, like, I think the market does fear a recession to a certain point right now. I don't think we're close to a recession necessarily yet. But I think the weaker the market is, the more the market looks like a crash or correction, the more people correlate with recessions. And so that's going to influence the buy. So I think, honestly, I really do think today the market might react negatively to weaker JOLTS numbers and positively to higher JOLTS numbers. But again, straight up guess. There's going to be a lot of variance in this, so I really don't know for sure. Not gonna lie, John, most of the time I have no idea what you're saying. I just pick up on some things, but I appreciate any knowledge. Hey, thank you, man. I appreciate it. I try. Like, I'm not perfect. I'm certainly wrong about a lot of stuff. But this crash and correction was not one of the things I'm wrong about. I told you guys I was pretty light. I wasn't buying up anything. And it makes sense. Like, you got to understand, when I see like some of the signs of a correction, and one of the reasons I thought we might correct is mania. All right, do you know what mania means? Mania means like a lack of objectivity in trading ideas. In this context, mania means something else. It usually means like the real definition of mania means like overexcitement, losing objectivity, I would guess, is something like that. But mania in stocks means like people keep buying despite the risks. They're too optimistic despite the risks, is what I call mania. Like they downplay the risks on the negative side, they upplay the rewards, and they just kind of get stuck in this position where they're too excited about the upside. And they're ignoring the downside risks. And I think we've certainly seen that since the AI boom. The market's up a ridiculous percentage prior to this correction. The market was up a huge percentage, 105% in 2 years. That's crazy. It's never going to sustain that. It's never going to hold that. Now, maybe we dip down. We needed this little 15% correction. We get some big money stepping in, buy this up, and maybe we keep going higher. That's very possible also. It's all about what big money does, and frankly, I don't know what big money does. Yeah, now I'm looking up the definition of mania. Abnormally elevated mood, energy levels, and behaviors. But the context, again, like I said, the context that mania is manic depressive, like super excited, like you buy a bunch of stuff, you act crazy, increased mood, reduced objectivity, and then depressive is what follows it sometimes with people with like bipolar is what this is. Like people with bipolar have like they have manic depressive episodes. That's a different thing. That's not what I'm talking about. What I'm talking about is people are too optimistic regarding stocks and markets. And I think we've seen that over the past really the past year straight. I think we've seen that, and we needed a correction. Yeah. But again, I'm gonna say all this stuff as well here, guys. Just because we're down does not mean we're gonna keep going down. It's very possible we rebound back up. We're down 15%. That's discount zone. And I think there's a good chance we might bounce right back up and start testing highs. I think if we do that, the risks of an even bigger correction are there. Like if we rebound back up and start testing highs again, I think there's even bigger risks of like a big correction if we do that. But if we keep dropping now and we get the correction over with now, again, I'm not even necessarily mad about it. Again, I was pretty flat. I protected myself from this almost completely. So you love to see it. All right, guys. All right, let's do a poll here, and I think the good question that we're gonna do for this poll is: does the market, do we bounce back? Does the latest drops in market? What's the best way to phrase this? Does the market continue down into crash territory, or does it rebound back up over the next few weeks? I think that's a perfect question. All right, sorry guys, I'm running into grammar. Top 3 grammars in the world right now. Does the market continue down into crash territory or bounce back up over the next few weeks? Question mark is going to be the question. I'm going to just do correction. Crash territory. Only a correction. Keeps going down. All right, there's the poll right now, guys. Vote on the poll. Let me know how you feel. Does the market continue down into crash territory or bounce back up over the next few weeks? Is it only a correction? Is it a crash? I don't know. Again, a lot of it's going to depend on the news that we get coming out. We got CPI inflation. We got Fed decision next Wednesday. We got PPI data. We got the JOLTS report today. Yeah, a lot of stuff going down. All right, guys. GameStop at 2240, Tesla at 227.60s. Tesla 228s. Look at Tesla, man. Tesla's been on a freaking downturn. All right, guys. Bro, now is such a scary time to be young, man. All right, guys. So volatility remain high until the tariff stuff calms down. Yeah, the trade war. But again, like once this stuff ends, we might get better action here. Delta Airlines CEO says consumer sentiment is still not as strong as they would like, but they have the tools to manage it. Let's talk about the big catalyst today. Volkswagen CEO says 20,000 car will be imported and produced in Portugal with some companies from suppliers. Looking at some other news here. All right. So here we are. All right, guys. So Dow Jones yesterday fell almost 1,000 points. S&P dropped almost 2%. NASDAQ declined almost 3%. Nvidia's down by over 5%. Palantir fell another 10%. Tesla down by 15%. What's contributing factors to all this stuff is tariffs. So the president's tariffs on Canada, Mexico, and others have raised investor concerns about economic slowdown. Citigroup downgraded its stance on U.S. equities from overweight to neutral, citing bearish market signals and limited U.S. exceptionalism. Today we got the JOLTS providing insight into the labor market dynamics, the JOLTS job opening and labor turnover survey. We got CPI tomorrow, 8:30 Eastern Standard Time. The JOLTS report is going to be at 10 a.m. Treasury yields are nearing 6-month lows, which is honestly good for if you want rate cuts. If you want rate cuts, here's Treasury yields. They are at 6-month lows. The dollar's weak. Yeah, Treasury yields are at 4.2%, which is some of the weakest they've been in a long time. I just don't see a reason why there would be any gap ups anytime soon. We only have bearish news. Well, I mean, because nothing is permanent in markets, right? Like, we're going to have bearish news. Like, they could have a lot of bullish stuff come out, to be honest. They could have a lot of bullish stuff come out. Like, there could be positive developments in the economy and CPI inflation and tariff news. There could be a lot of positive developments that come out. It doesn't, like, you never want to be too weighted to either side, you know, and I think, like, it's reasonable to assume right now the market up 105% in 2 years. Now it's pulling back about 15%. Where we go from here is very variance heavy. Like, there's going to be a lot of variance in terms of, like, where we go now. And so, yeah, y'all just be careful. How are you down 120K? I'm not down at all. Again, I told you guys in December, if you weren't watching me then, I'm sorry, but I told you guys, honestly, I've been telling you guys for the last few months, I thought we might correct this year. I thought it was time. You know, so I'm flat. Honestly, I really am flat. I got out of this. I avoided this. And I was pretty outspoken about it too. You know, y'all would never hear the end of it. I was right. Well, long term's always bullish, but you know. What do you think about the Dow? Where's the Dow? Yeah, I mean, we can call it luck, but I mean, when I'm outspoken about thinking the market's going to correct soon, and I say it for months, and then we correct, is it luck? You know? Y'all, like I said, y'all will never hear the end of this. I'm going to brag about it until the end of time. You're welcome. Guys, you're welcome. Yeah, I don't know what the market does right now. I really don't. We're going to trade today, though. We are going to trade today. We'll see how it goes. Bro, I'm sore everywhere. I got paintball whelps all over me right now. Is this live? Yeah, it's live. All right, guys. Yeah, so the market's red. Yeah. Bond yields are down, which is a lower interest rate sentiment. And again, bond yields and interest rates follow each other. Honestly, the SPY's kind of green, though. Look at the SPY. I mean, I know we dropped brutally yesterday. SPY's up to 564s. I do think there's a chance we rebound back. I do think there's a chance we bounce back. Yeah, Nvidia dropped over 5% yesterday. Palantir fell over 10%, which is crazy. Tesla's the big boy that's weak, though. Tesla, one of the weakest stocks. Yeah, we got the JOLTS reports. Yeah, we got Palantir. We got inflation coming up. Again, every day we do a post on X. If you want to give me a follow on X, help support your boy here on this channel, we appreciate it. Here is our latest post. Here it is right here. If you want to give me a follow, every day we do a post, at least one post breaking down everything going on in markets. Markets are down massively right now. There's the link if you want to help support the channel. There it is right there. Yeah, but trading cowboy, we're nowhere near that. Like, that's a different market, right? Like people always seem to confuse market weakness and economic weakness, you know. And sometimes they're correlated. Like, I think we might get a more parallel reaction with jolts. Like, weak economy makes the market go down and strong economy makes the market go up. I think we might get that because of the increased recession worries that we get from downward pressure like this. The problem, though, is that weak market doesn't mean weak economy. And right now, GDP is at 2.3%. Unemployment's under 4.5%. Payrolls are 150K. You know, so like none of those things point to a recession. They just don't. And so, you know, it's one of those things where we're not really in a recession. We're not really close to one either. So, yeah, I don't think throwing recession out there is, you know, we're just not in one yet. And so the reason I'm saying that, somebody said something about stimulus checks. We're not going to get stimulus checks. We're not in a recession. We're not anywhere close to one, into anywhere we would need, into a point at which we would justify that. That would actually make the problem much, much worse if we sent out that. The problem is inflation. The consequence of those are inflation, 100%. And so sending those out would make inflation way worse short term. When was the last recession? Well, recognized or unrecognized? The last unrecognized one was like mid to late 2021 or 2022, where we had 2 consecutive losing GDP quarters. But they said it wasn't one because they said unemployment was still low or something like that. But technically that would have been one. Although we did bounce back pretty freaking quick, right? So we ended up bouncing back and the economy ended up growing pretty fast from there. And so I'm kind of undecided on whether that was one. Technically, by the technical definition, the long-term technical definition, sure, you could say we were in a very slight one in 2021 and 2022. If we're looking at the longer run, acknowledged one, the last real one was 2008, 2009. So, you know, everybody's different. It depends on the trader. Fee saying, can you outperform the market day trading long term? Everybody's different. Some people can, some people can't. I don't think it's about outperforming. I think, like, if you're good enough, you could do both, you know. I think you should always, I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly. I have no freaking idea what I'm talking about. This is not financial advice. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. With that said, though, investing is always generally good. As long as you have the patience to sit on it long term, investing is a very easy moneymaker in life. It's the biggest inflation hedge you can do, and you got to invest in something that goes up over time to hedge against it. But everybody's different. You know, some people are going to be really good at day trading, and they're going to be able to really outperform it. Other people are not, and they're just going to lose. And so it depends. Yeah, 90% of day traders lose. And so if you do try to day trade, I would learn on something like Top Step as opposed to funding your own account, because most day traders just freaking lose. You know, I'm always honest about it. Like Top Step is like a way to avoid losing more than like most day traders end up losing. It comes from my own experience. When I first got started day trading, I went and saw the movie The Big Short, fell in love with like finance is the best way I could call it in economics. And I started researching and learning. First, I learned day trading, and I tried to day trade penny stocks and blue chip stocks. I went to the big penny stock gurus and lost. And then I saved up $4K and deposited it into a brokerage. And my wife she genuinely discouraged me not to do this. I did it anyway. I lost thousands of dollars really quickly. It was all I had. Basically, and what happened, like the way I grew this YouTube channel is I started this YouTube channel and I started uploading my videos. But at the time, and this was a long time ago, at the time, there was a lot of people claiming to be like the greatest traders ever, right? They were like, oh, look how great I am. They were selling courses. They were all these gurus. And I was like, you know what? All these guys are full of crap. I was like, let me upload videos and just call myself a beginner, because that's what I am, and let people watch what it's really like for a beginner to trade. And we called it beginner trading, and we uploaded videos. But I ended up losing thousands of dollars in the first few months, and I uploaded the videos of me losing, or of me trading, and lost all my money, and then basically stopped uploading for like a year straight. And, while I stopped uploading, I would kind of check it every now and then, and my subscribers would grow. I would slowly grow and slowly grow, and my videos would slowly get views and slowly get views and slowly get views, until before I knew it, I had hundreds and hundreds of subscribers when I wasn't even uploading anymore. And so that gave me the itch to kind of come back and try it again. But since I had lost so much in the beginning, I came back with a more reasonable approach, like risk management, small size. Like, stop trying to look cool in markets and just trade small like you should be. And that's kind of how we got where we are today. Eventually, we started covering economics, and we kind of grew it to where it's at now. But that's how we started this thing. Back when it wasn't super saturated to start a finance channel. And so, yeah, it ended up working out. It's a blessing for sure. But that's why Top Step's useful. Because most day traders lose. And right, people might criticize whomever, would do whatever, but most day traders are going to lose. Doesn't matter what course you take, who you follow, who your mentor is, who your guru is, what strategies you use, most day traders are going to lose, especially in the first year or two. And so it makes no sense to fund thousands of dollars into your own account trying to look cool. I know you think you're going to be different and you think you're going to build riches and all this stuff. You're probably just going to lose. And that's why Top Step is useful. They give you a demo. They test your skill with it. If you fail, you get a practice account that you can learn on anyway. It's $50 a month. If you pass it, you get a $50K funded account with a 90% split. And they pay out millions. They fund thousands. Great way to learn how to day trade. It's the best of both worlds. 90% split, similar to funding your own account. $50 is much less risk than you would take funding your own account. So it's the best of both worlds. And again, most day traders lose. In the futures market, you can day trade the S&P, the Dow, the NASDAQ, the Russell, the gold, gold symbols, some currencies. A lot of Forex traders should be trading futures. And Top Step's the most legit one in the world. And there's no PDT rule in futures. And if you use Top Step X when you sign up through my link, there's zero commission as well, right? So no commission. Tiny amount of fees per contract, so you can basically trade micros. If you know futures, you can trade micros, learn how to trade. It just makes sense. We'll trade on it a little bit later. But they're an affiliate of mine. I get paid by them, so I'm biased, of course. But if you want to check it out, here's the link. Hey, question. You call a correction normally as a correction is 10%. A correction is 10%. A crash is 20 to 25% or more short term. Yeah, I've got 3 funded accounts on Top Step right now. Yeah, Big Short's a great freaking movie. Great movie. I would say The Big Short, like Wolf of Wall Street. And I've talked about the irony behind Wolf of Wall Street. You know what's funny is that I made a short, and I'm not trying to take credit for some of these videos, but I made a short video like a year and a half ago about the irony of the Wolf of Wall Street. And the whole premise of the short, and I can show you this short. The whole premise of it was that they made this movie to criticize exuberance and wealth. Right? The Wolf of Wall Street. They made it to criticize people like Jordan Belfort. Leonardo said he's like one of the worst people in the world. They made it to criticize wealth, right? And that's the point of the movie. If you look deeper, the point of the movie of Wolf of Wall Street is to criticize wealth. But the irony behind it is that the exact opposite thing happened, which is that they made this movie, they glamorized that wealth so much that at modern age, there's thousands or millions of Jordan Belfort clones out there that got inspired, deeply inspired by The Wolf of Wall Street. And the movie that's meant to criticize wealth ended up spawning clones of Jordan Belfort. The irony is hilarious, I think, if you think about it. But I made a short about this like years ago. And that was the premise of the short, how funny it was. And then like 6 months ago, I see these big influencers start posting videos. One posted a video about the same premise, about the irony behind The Wolf of Wall Street. And so I gotta wonder at least a little bit, and maybe this is just me in my head. I'm sure the haters will say that, but I gotta wonder if they watched my short and figured they can make a topic about that. It's hard to tell. Yeah, there's the short. Thank you, Pawn. Let me see it. Hold on. Yeah, there it is. When did I post this, dude? It was a small, I didn't do great. Yeah, I posted it over a year ago. Interesting. You know what else is funny is that from what I can tell, I made a backtesting video, backtesting the opening range breakout like 4 or 5 years ago, before anybody else did backtesting videos too. And I haven't been able to find a backtesting video that was older than the opening range breakout video that I did 5 years ago too. So I'd love to believe I started that trend as well. I might just be in my own head here and, want to take credit for everything. Definitely possible. But I haven't been able to find a backtesting video that's older than my opening range breakout video. And so shorting the Dow, the VIX. Where's the VIX at? The VIX has got to be rocketing up, huh? Look at this big correction short term too. Look at this drop right here, guys. Wow. This is a dip. We were looking pretty good prior. What happened? Bank of Canada rate decision is due tomorrow. Volkswagen. What else we got? All right, so BIS says global uncertainty is high due to the trade war risks and geopolitical shifts. Early market reaction to German and European defense spending plans has a positive feel. Yeah, but something else had to happen here. China's Manus AI has announced a strategic partnership with Alibaba Quinn. Definitely in my own head, no disrespect. Find me a backtesting video that's older than that video I published. Genuine, seriously. Find me a backtesting video on YouTube that's older than my orb backtesting video. If I'm in my own head, find it. I'm genuinely curious. If I'm wrong, I'm wrong. I'll admit I'm wrong and make fun of myself all day. That's fine. But find it first, because I haven't been able to find one. And the guy that made the trading video, what was his name? He made backtesting videos for a long time. He said I was copying off of him. And then I told I don't know if it was him or somebody in the comments. And then I responded back with the backtesting video. And then I got crickets because it was older than his videos. It's older than his channel. Feels bad getting rich off an economic depression, but someone has to do it. We're not in an economic depression yet, though. Like, we're in a market correction for sure. Yeah, I'm going to use you guys like Google. If there is an older video, I'm not saying there's not. There might be. I'm genuinely curious, though, if y'all can find one. Look, I'll show you guys. Let me find it. Hold on. Find me a backtesting video. Hold on. I made a video called I backtested the opening range breakout. These are my results in October of 2019. CPI tomorrow, man. Honestly, what is CPI expected to show up as too? Hold on, let me see. And this video got about 40,000 views too, so it's not a small video. It's a video that everybody knows. Yeah, I'm trying to see if there's any elevates. CFO says Q1 street estimate of FactSet's a dollar light and says analysts view EPS is below cost. What made the market pull back just now? Let me see if I can ask AI this. Yeah, I can use ChatGPT. I asked it what made the market pull back just now, but honestly, it's so frozen. So a lot of people are saying recession possibility, big drops in tech. What made the market drop? Apple is down to 226s today too. So Apple corrected pretty big. I'm trying to see if there's any other. Tesla dropped. The Dow dropped. See Meta. Meta's up pretty big though. Oil prices maybe? No, oil's pumping. Could be Nvidia, I guess. But Nvidia's not really down that much. This is weird. This big correction right here to the downside is strange. Bitcoin also obviously looking pretty rough. Here's Nvidia. I don't think we have any economic report going live at 8:30 either. Let me make sure. Tomorrow we get mortgage data. We got the JOLTS report. That's it today. Everything else is pretty boring. Yeah, I'm trying to see. JP Morgan raised the recession chances to 40%. Did you make it on the true orb? I made it on the 5-minute opening range breakout. And so basically you let the first, I don't remember if I did a 1 candle or a 3 candle opening range. And then looked for it to break the high of that opening range, and then back tested it over a large sample size is what I did. This was 6 years ago, so I'm trying to remember what it was, but I'm pretty sure that's what it was. Yeah, and I don't see any other big news that came out either. So very strange. Verizon exec says company has seen an elevated level of competitive intensity in the Deutsche Bank conference. Don't we have GTC coming out too? Hold on. Yeah, GTC. See, something that could save us is GTC. If GTC comes out really optimistic for chips, wait a minute, my chips. If GTC comes out really optimistic for chips, it could save the market too. Let's see. What is GTC? What's the schedule? I know it's next week. But remember, next week we got the biggest chip conference in the world. All right, so what you really want to listen to is Jensen Huang's keynote. Yep. It's going to be March 18th at 10 a.m. Pacific. So this is going to be next Tuesday in exactly a week. We got Jensen and GTC, and that's ahead of the Fed meeting too. Yeah, I mean, this was me 6 years ago. Hey guys, do you have any editing? So y'all are like my Google. Is there any AI editors that will cut out like the pauses in videos and that can kind of closely edit long-term videos, like longer form videos? Is there any AI that can actually do it successfully? Like I need an AI system that can cut out all the pauses, like remove all the the nonsense from it and edit it for me. I would love a video to do that, but you know. I don't know. If you guys know any and use any, let me know. I know short form's kind of taking over the world, but still. In video. I've tried in video. It doesn't really work as well, to be honest. Alright, so look, we dipped, had this big pullback this morning, and then bounced all the way back to that 200 exponential volume weighted average price spot. I kind of want to trade here. Let me see if I might trade a little bit this morning. Don't get too mad, because I've actually had some pretty good success trading recently, you know. Like yesterday, we had some pretty good results, so let's trade. I'm going to short one little baby contract here. Just one. And maybe we'll add to it up here too. And if we break over like 527s, we'll cut it. Oh, I was just about to add to it. But that's alright. There we go. We're going to add to it here. We got two contracts. Well, you can't slap me this morning? Haha. I'm gonna cut half of this. I don't know. It's kind of taking a little bit too long here. And so we're gonna take our baby little loss there, see if we can make it back. I will be disappointed if it turns on me though. But just limiting my risk here, keeping it small in pre-market. Recession, brother. We don't have a recession. We're not in a recession, guys. Speaking of the VIX, let me take a look at the VIX. Yeah, guys, like, listen, we're not in a recession right now. Again, if we were in a recession, you would know it. There's a difference between the market dropping and a recession. Yeah, the VIX is up to almost 30. There really is. There's a big difference between the market dropping and a recession. So, we're not in a recession right now. We're just not. GDP needs to be negative. We're not in negative GDP. Alright, so now we're almost green here. We should have held maybe, but it's alright. Again, I feel like people are just arguing with me because they know it's wrong, and they're just arguing with me just to have fun. But if you genuinely think we're in a recession, explain it, because we're not. GDP's not negative. The same people saying we're in a recession cried because they quote-unquote changed the definition years ago, you know. Way to be consistent. Don't bounce off of my entry. Alright, there we go. I should have held. Honestly, I would have made money if we held. I'm going to add to this now. See if we can get a nice little breakdown. Come on, give it to me. Keep breaking. There we go. Take half off there. Just lock it in. Now we're basically pretty close to flat. I might add a little bit more too. We're basically completely flat on the day. We're down like $5 or something. If we retrace up though, which I hope we don't, but I will add to this. There's 2. I'll take 3. Oh man, what a punishing move back. This thing just beat me up, guys. We're only down $30. Sheesh, dude. All right, we're out. Let's see, we're down $50 today. Pretty small. We made hundreds yesterday, so you know we're okay. But you don't love to see it. I should have gotten slapped in pre-market. Somebody should have stopped me from trading. when your neighbors start losing, it's Losing, James, by the way. It's loosing. When your neighbors start loosing, I'm going to just start pronouncing it that way and see if people get it. When your neighbors start losing their jobs and start selling their boats and weekend sports car, you will know we are in a recession. That doesn't mean we're in a recession, though, guys. It really doesn't. Like, listen, things can be bad in the economy, but we not be in a recession. Okay? And I would argue we've kind of been that way for a long time. A lot of the reason people are unhappy is from inflation over the past 5 years, not a recession. Most people are unhappy because of inflation, prices being too high, which is actually the opposite of a recession. And so, yeah, we're just not in a recession. We need 2 consecutive losing GDP quarters. Unemployment's still pretty low. We're just not in one. You know, things can be bad and we're not in a recession. I think that's the problem. And I think there's a lot of like media pushes on both sides, especially like during election years like last year, that's saying, look how bad things are. And so there's a lot of like confirmation bias that people want to have regarding recession. But just because things are bad does not mean we're in a recession. It's not the same thing, unfortunately. And this hurts. I was in this. It was correct. You don't freaking love to see it. But I'm just probably going to wait and be a little bit more selective with my trades. But yeah, things can be bad and we're not in a recession, guys. It really can. Like, just because things are bad does not mean recession. We can have super high inflation, unreasonable prices, people struggling because of real estate and mortgage price dynamics, and us not be in a recession. That doesn't even count anymore. Of course it counts, you know. Look, here's the drop. We were right about our direction too. Look at this. We were right about our short direction as well. Just a mismanaged trade by my hands. I blame my hands for this. But yeah. Again, like I'm saying, guys, listen. You want to be consistent here, okay? If you cried a couple years ago about them changing the definition, you got to go by the definition today. You can't yell and scream they changed the definition and then today act like we don't have to go by the definition. Now, I'm okay with wanting to stick to the conventional definition of a recession, which is 2 consecutive losing GDP quarters, but we're just not in one yet. Like, what we're in right now is a market correction, not an economic correction. Not yet. Again, we need the economic data to justify calling this a correction or calling this a recession. We're just not there yet. You don't want to overcall recessions. You know, I don't think that's healthy. And I think there's a lot of confirmation bias on both ends of this political spectrum that they want to say we're in one so they can criticize, or so they can say, hey, we need our guy because of this and this. But yeah. Yeah, but we will never know. That's true, Ford. 100%. I agree. But don't you think we need unemployment to be high, though? Unemployment's not lagging. And so we need jobless claims to be weak, which they haven't really. We need unemployment to be low. All of those things signal a recession. Dude, this one hurts because I was so correct about the direction here. Look at that. I wanted to attack the 200 exponential. We're not basing recession concerns solely on the stock market. Okay. Well, then what are you basing it off of? I'm not saying we can't be concerned about an incoming recession. What I'm saying is we're not in one right now. You know, we need the data to justify it. He should have held. Listen, I definitely should have. Top 3 least holding traders in the world right now, man. And I'm upset. Not really super upset. I mean, I'm all right. I make money no matter what, to be honest. But I would love to have made more money today. And honestly, the 200 exponential is just a beautiful level here. Look at this level. Like this is what I'm saying. If you're not watching the 200 exponential on a 1-minute chart, you're missing out on a huge level that influences price action. Look at this. We dip, we rebound, we reject. That's what I wanted to attack. How's BJJ going? I got my blue belt in BJJ. You know, honestly, I've been doing pretty good too. I'm getting really deep into like Kimura game. Kimura is kind of like my go-to move now. The fact that a lot of people don't have jobs, well, shouldn't that be more deeply reflected in unemployment and jobless claims? Hey, thank you. Yeah. Dude, definitely top 3 biggest paper hands ever, bro. A big pop of paper hands showed up today, and I don't know what happened to these hands. They used to be the top 3 greatest hands in all of time. In jiu-jitsu, they're definitely the greatest, you know, but today, man, just struggling. I don't know what happened to me. The VIX is up to almost 28s, guys, up to almost 28s. When's the next unemployment release come out? What was last week? Yeah, last week payrolls came in at 150K. Unemployment showed up at 4.1%. So, I mean, it's higher, but I wouldn't say it's negative GDP higher. You know? Not from 2.3% to negative. You know what I mean? And, like, to understand, like, GDP, right? So, people are saying, hold on, let me... All right, look at Apple. So I'm looking at Apple. Apple's one of the reasons we pop it. Oh, man. It was one of the top 3 greatest shorts of all time. And I botched it, guys. I botched it. Tesla down to 223s right now. Tesla's still very, very weak. All right, guys. Yeah, because I'm trying to look at like what the last couple jobless claims reports were. So like jobless claims last week were 221. So we're still well over we came in better than expected. So GDP is lagging, but jobless claims is not. And jobless claims showed up at 221, which means less people filed for unemployment week to week as of March 6th. We can also look at like services, and ISM services came in stronger than expected at 53.5 last week. ISM manufacturing came in basically as expected at 50.3 last week. And so I don't see signs of a recession yet. I just don't see it. Now maybe I'm wrong, but I don't see those signs yet. It's not weak enough to say recession yet. Now, we might be headed that way, and if we don't change things, maybe, but for now, we're not. GDP is high because prices are high, companies are price gouging. Right, but that's the opposite of a recession, brother. Right? Like, okay, so you got to think about it like this. There's 2 different sides of like balance in the Fed and economics in the US. There is too much spending. When too much spending has occurred, prices can sometimes go up, right? And that's bad. If the interest rates are too low for too long, we get too much economic stimulus, we get too much stimulus checks, we get too much quantitative easing, we get too much economic stimulus, prices can increase. Right? And that's bad. That's called inflation, of course. That's called inflation. The other side of that, like kind of the opposite of that, is economic weakness, like recessions, depressions, negative GDP, losing jobs, all that stuff. And so if prices are too high, that usually means the labor market was a little bit too hot for too long, or there's a lot of reasons for it. Really, what people are unhappy about modern age, and I've said this 1,000 freaking times, but the reason people are unhappy today is because of the inflation that we got following the deep quantitative easing stimulus check environment of 2020, 2021, 2022, right? Those 3 years, we had everything crazy go on in the world. Supply chains were shut down, inflation spiked because of, the Fed stepped in and did QE. They printed money. They sent out stimulus checks. They did a lot of economic stimulus to try to save us from a potential recession back then. And the consequence of all that economic stimulus was inflation spiking up to almost 10%. That is why people are still unhappy to this day, is because prices are so freaking high from all of that economic stimulus that we got following 2020. But that doesn't mean a recession. People might be brutally unhappy around that inflation. Like, prices are super high. They're 2-3x what they were in 2019, right? That sucks. I agree. I'm not for that. I don't like inflation either. I would much rather us enter a recession than have inflation spike up to any significant amount like that again, anytime soon, at least. But that's why people are unhappy. And again, they've been unhappy about this for freaking 3-4 years now. They've been unhappy about all that inflation, but that does not mean a recession. It just doesn't. Now maybe we could be trending towards a recession. It's possible. I don't really see it yet, and GDP is lagging, and so maybe we show up negative. I just think it's a far stretch to think that we're gonna jump all the way to negative for this GDP, but it's possible. I guess we'll see. We'll know in a couple months. I'm not going to say exactly when 1975 because that's giving me too much information. I was a real estate agent for years. Still am. I still have my license. It's not active. It's what's called a non-active real estate license. But yeah, I was a real estate agent for years. I run a couple different businesses, to be honest. Like I ran a couple different businesses. There's a lot of stuff I did. So I had an Amazon business. I was a real estate agent. I did some software development and still do. Some like React Native, JavaScript, mobile development stuff. I run this YouTube channel, and I also made a good bit investing. And so like I've got a bunch of income sources, to be honest. And but the last time I worked an actual job where I got like a W-2, probably about 8 years ago. Like, I've worked a lot of jobs. If you think I've never worked a job, I have worked a ton of jobs. I've been a waiter. You can be around some people and you can tell how they treat waiters, whether they've ever worked a service job before. You see some people that are just mean to waiters, and they're kind of rude, and they're entitled, and they're just crappy to waiters. You can tell they've never worked a service job in their life. I absolutely have. Very difficult jobs, and I'm usually pretty nice to like waiters because I've been there. I get it. But I bartended. I've been waiters. I freaking worked fast food before. I've done a bunch of different stuff. My parents didn't give me money a lot. Like, I had to work for that, and so it's different. You got rental properties? Yeah, I do. Well, I know. I try. I love to have a general sense of decency, but I have empathy towards people like that because I've been there and I know how hard it is. And a lot of the time, the people that are rude to waiters, they're just trying to justify a crappy tip. They're just being cheap, and they're trying to justify a crappy tip in their mind. And so they end up looking for things wrong so that they can justify it, so they can just be cheap. They're usually, again, I'll say it once, I'll say it again. You get what you put out there. If you're negative to people, if you're not good to people, you get that back. You can't cry about it when you get it back either. If you're like that to people and then you have bad luck or something bad happens, you can't get mad because you're putting negativity out in the world. If you put goodness out, you'll get it back. That's what I believe. And honestly, that's what I've experienced too. If I'm kind to people and I'm nice to people and I try to be good to people, then I generally get it back. Anyways, markets break it down. Top 3 worst managing trader in the world right now, man. I should have held this short. I would have loved to do it. I look like Bradley Cooper? See, that's better. I've heard Forrest Griffin. I've heard Paul Felder. I've heard Ryan Felipe. I've heard Bradley Cooper before, but I don't really see it. I don't really see it. I've heard the guy that plays piano and sings on social media. I don't know what his name was. I've heard a bunch of different names. You know, they're all better than Forrest Griffin, though. You know, that one kind of hurt. That was a dagger to my heart. Anyways, market's flushing. We'll see if we bounce. Yeah, I don't really see the Bradley Cooper one. I know. Liberace. Paul Rudd. See, now I think what I've realized, maybe I look like everybody. I don't see Paul Rudd at all. Is AMD still dumping under $100? Yeah, it's at 97 now, so AMD still looking pretty weak. I can see Paul Felder, right? Like, I can kind of see Paul Felder. Let me see. Like, look, here's Paul Felder right here. So I can kind of see Paul Felder a little bit. See, I kind of look like Paul Felder in that my beard is a little red like this. You know? So my beard is a little red like this. So I can kind of see Paul Felder. The Irish Dragon. How about freaking Ankalaev, bro? People say Ankalaev didn't win. He definitely won, man. Pereira wasn't throwing anything. He was just throwing leg kicks. That's it. Jolts is at 10 a.m. We got about an hour and 15 minutes. Actually, let me put the timer up here. There we go. We got the timer up. We got Jolts Report going live today, guys. Let me know. You think Jolts Report is going to show up stronger or weaker than expected? Jolts Report today is expected at 7.6 million jobs. 7.6 million jobs. Yeah, so we'll put that up on screen now. So actually, we just put that up on screen here where now it says it on the bottom right here. 7.6 million expected in parentheses now. We're still trending low, kind of choppy and sideways here. Maybe we're going to chop leading into this report. It's possible too. John Rudd. Yeah, Ankalaev definitely won. I wanted Pereira to win, but Pereira, for whatever reason, stopped throwing after, like, the first round. I really didn't understand it. So, like, if Pereira's strength is his check hook, like his powerful check hook, where's the check hook? Like, maybe, you know, the stance threw him off a little bit, but he didn't seem to throw almost anything, you know. I don't know what Pereira did. Honestly, I almost thought Pereira wanted to lose because the pressure's off of him and now he can do more valuable super fights, but he didn't want to get KO'd and embarrassed, so he just kind of like intentionally lost the decision maybe. But I don't know. Dude, I'm definitely top 3-ish worst trader ever. Hey, what's up, Manny? Yeah, the report's big. We'll see what happens. Market's still flushing down too here. Again, we're down about 15% now. So we're definitely in correction territory. Here, let me put this up on screen now. $10 a.m., the massive Jolts job report. Yeah, so huge Jolts job report today, man. This is a big report, to be honest. All right, guys. So, yeah, we got the JOLTS report today. Honestly, man, it's been a freaking chaotic day. We still got 13 minutes, so we'll wait. And yeah. Yeah, but we got 10 a.m. Look at the market still flushing down here, too, man. Wow. All right, so yeah, the JOLTS job openings today. All right. Yeah, this is a huge report ahead of CPI as well. All right, guys. So market is still dropping. Apple is down today. AVGO is slightly green, but it's down over the past 20, 30 minutes. The SPY is slightly technically red at this point in time. So the SPY was green most of the day. The VIX is still rising with all this economic weakness, or with all this stock market weakness. Netflix is now down to 860s, 850s here, man. Market's brutally red. Apple's down on the day to 225s. Still dropping. I should have kept shorting. But hey. That's how it goes. All right, so here, sorry. Now we're popping back up a little bit. Do we short into this, chat? What do you guys think? Do we short into this? Will the report have a big impact on price action? Maybe. I think tomorrow's report's going to be larger, and we do have... Can we just change the definition of a correction like they changed the definition of recession? I'm okay with people being critical of them changing the technical definition. I understand. But what I'm saying is that if you're mad at them for changing the technical definition, you can't say we're in one right now because we're not hitting the technical definition of one yet. And so, yeah, that's all I'm saying. Part of me wants to buy this up. I know this is hella risky, but look, I'm going to buy one contract here. I think it's cheap, and I think we got good risk reward. I could use a risk level of 443s. I could use a reward target up here at like 521. So we got good risk, good reward, small amount of risk. And if we go in my favor, we'll add more to it. But it's definitely trading against the trend. It's just a little cheap, and so I'm going to take it. Denial is a crazy drug. I know, but you know, like, listen, like you get people that say this. Okay, what is your justification for us being in a recession? Genuinely curious. Like, what is the justification for it? Like, I could go around being like, hey, I'm a billionaire. But if I don't have the paperwork to back it up, does it mean anything? I'm gonna change my name, John the Billionaire. I'm gonna get rid of my last name, London, and just make it the Billionaire. Well, I think most of it's confirmation bias. I think they want us to be in a recession right now, right? Like that, they want us to be in one, and so they're more likely to kind of like assume we're in one when we're not. But again, we could certainly be heading towards one. I'm not even arguing against that. I just like to look for confirmation. Ugh, you don't love to see it. I'm trading too much in pre-market. I gotta cut it. Again, I gotta stop trading against the trend. We're gonna switch our funded account to a separate one. We're still green on both of these, but I don't want to lose more than like $100 on that one on the day. We made well over that yesterday, but yeah, I just don't want to lose over that. Yeah, we're still very green on both of them, so that's good. And then the other one we're flat on. Yeah, we got a completely free Discord. It doesn't cost a penny. If you want to make fun of my trades, guys, join the Discord. There it is right there. Great way to help support your boy here on this channel. We'll see what the JOLTS report looks like. But there's the link right there. Pawn just posted it. The report is at 10 a.m. Eastern Standard Time. So 10 a.m. Eastern Standard Time. If we're talking about Central Time, it's in an hour. Look, the timer's right here on the left side of the screen. What's up, Wesley? All right, hold on. All right, guys. So market's still testing this low level. Let me check Discord here. I don't think I pulled it up yet. Again, GTC conference next week is the kind of like wrench that might get thrown into the market. GTC is the biggest chip conference in the world. Sorry, Pawn. I'm just pulling up Discord. Oracle misses on earnings. Went up still on new deals with NVIDIA. Delta Airline consumer warning hit travel stocks. So the president came out and said he was going to buy a Tesla. You know he's getting pressure to say that, though, to be honest. What is your strategy today and why is it shorting Bitcoin? Who's shorting Bitcoin? That's definitely not my strategy. Hey, bud, we are in a recession for sure. See, look, I get people that say this. What is the reason for it? Like, listen, this happens so much. And again, I gotta kind of like talk about it. Maybe I'm wrong. Maybe we're in a recession. But people are like, hey guys, we're in a recession. And I'm like, why? Why do you think we're in a recession? Because things are bad, okay? Okay. Explain. Divulge. Like, explain yourself, sir. Like, don't say, hey, we're in a recession. And then I'm like, how are we in a recession? And then, because, bro, people are unhappy. Okay. How? I'm not saying how are they unhappy. I'm saying how are we in a recession? Explain the metrics behind this. This is what I want to know. I want to know the numbers. I want to see the receipts for it. You know what I mean? If you don't have the numbers and you're just saying things are bad, okay, we're in a recession, that doesn't mean anything. You got to tell me the reason we're in a recession. And again, usually when I say that, silence, crickets, no response. We get no response from these guys. And so listen, I'm not saying y'all are wrong. Maybe I'm wrong. Maybe we are in a recession. But again, you got to give me some substance behind it. I just want to hear the substance behind it. I don't want to hear we're in a recession and then when I'm like, hey, why? Because, bro, people are unhappy, man. You know, okay. Because my uncle lost his job. Okay. I guess that's better than nothing, but it doesn't mean we're in a recession. He's probably typing my portfolio when it's in a recession. I have the numbers. Oh, I mean, you owning a business doesn't mean you've got some secret numbers that nobody else knows about. I run multiple businesses, but that doesn't give me super secret recession data, Again, maybe I'm just playing around here. I could be wrong. Like maybe we are in a recession, but jobless claims were lower than expected last week. If you want to know why is jobless claims important? We get a lot of people that talk about jobless claims here. Jobless claims are important because it's more real-time jobs numbers, right? Jobless claims were lower than expected last week, meaning more people were working than expected. Less people were filing for unemployment. Payrolls are still over 150K. Unemployment's under 4.5% in the latest metrics. GDP, even though it's lagging, is at 2.3%. None of that stuff means recession, guys. None of it. Maybe we could be heading towards one. That's a much better argument that we're heading towards one. I could certainly agree with that, but we're not in one right now. We don't have the data to back it up. The yield curve's been inverted and uninverted in Enrique for about the last 3 years. The SOM rule, maybe, which the SOM rule is basically spikes to unemployment. If unemployment, I think if it spikes 0.5%. But that happened a while back. Like that wasn't recent. The SOM indicator wasn't recent. And even SOM herself said she didn't think this was a recession. Again, we got to look at the technical definition, which is two losing GDP quarters. And while that's lagging, we got to look at jobless claims. We got to look at unemployment. And I think those two things, we're not in a recession yet. Not yet. Maybe we're headed towards one. Eggs being high means inflation, which is actually the opposite of a recession. Like, if your argument that we're in a recession is that things are expensive, bro, things have been expensive for 5 years. Since 2020, really. We're a little bit earlier. Things have been expensive for 3 years since 2020 and the consequence of the economic stimulus that we got following 2020. That's why things are expensive. But that's, again, not a recession. That just means prices are expensive because of all the quantitative easing and stimulus checks and economic stimulus that we got in 2020. 2021 really was like 2022. But, yeah. Inflation doesn't mean recession. It's actually the opposite. Inflation usually means a strong labor market and a lot of economic stimulus, which, can sometimes lead towards one, but we're not in one yet. We're in a recession because I can't buy eggs. Where'd you see a negative GDP estimate, Fabio? Right. That's still the definition of a recession, Rob. That's absolutely the definition. Yeah, we could argue stagflation. Look, if CPI comes in tomorrow, again, like I've said before, we're definitely going to hear stagflation. And I can kind of agree with it. And that's a precursor to a recession, but it's usually not a recession. It's a precursor to one. 57 minutes. Yeah. Hey, we got 28 minutes until the market opens. What are the sources though, Fabio? So who's giving out negative GDP estimates? Because I haven't seen any of those. I haven't seen any negative GDP estimates. Let me ask AI this. I'm not saying you're wrong. Did anyone recently give out negative GDP estimates? You had SPY. Again, I'm not saying you're wrong. Let me look this up. You might be right. Bro, my AI lags so much, dude. Bro. Sorry, honestly, I got stuck in one of those long-winded emails where they're telling a story and then you try to figure out the end of the story and they just make you keep scrolling and scrolling. I got stuck in one of those. My ADHD kicked in. All right, so now I'm looking up GDP. So it did say a couple analysts are projecting. Chief economist Douglas Porter and BMO Capital suggest GDP could slow to 1% in quarter one, down from 2.3% in the previous quarter due to tariff concerns. Yeah, but it's still not negative, and that's the problem, right? Is that like it's still not negative. Maybe currently, so the first quarter ends at the end of this month, so it's the first 3 months. So at the end of this month is the end of third quarter, or the first quarter. But even if we go down to 1%, it's still not negative. Hey, what's up, Roberto? Some analysts say minus 3%. Yeah, I see the GDP now minus 2.8%. I'm looking into that now. If that's true, that's a big drop too. Again, maybe I'm wrong. Maybe I'm talking up my tail, but that's a prediction as well, so I wish ChatGPT worked faster. Look at the bounce we're getting here. So we were kind of attacking a bounce down here. Yeah, guys, we got 24 minutes. We are going to trade today. We haven't traded on this account at all, but we're going to trade a little bit deeper. Yeah, so I guess the thing you have to understand here, this is why we're not in a recession, okay, is because basically the first quarter's not over with. Last quarter we were at 2.3%. And so we need more confirmation before we're in a recession. Even if they projected 2.4% GDP, right, we need another negative quarter to equal a recession, which we don't have yet, right? Now, maybe this means we're trending towards, if we get another negative quarter prediction for this following quarter, you know, again, once that quarter ends and we actually get confirmation, that means that we're in a recession. But right now, the first quarter that we might potentially get negative GDP means that we're halfway there, but we're not there yet. And so again, we're not in a recession. We might be trending towards one for sure, but we're not actually in one, and there's a difference. You got to wait for actual confirmation. Yeah, ChatGPT is so slow. And again, I'm not even mad about if we enter a recession. I'm really not. I think it would be probably the most beneficial thing. Again, I've said this once. I've said this rant before, and I'll say it again. I'm not mad if we enter a recession. The reason I'm not mad is because I think inflation is why most of you guys are unhappy. Everybody complaining about prices and eggs and all this stuff. Most of y'all are unhappy about inflation. Let's be real here for a second. Most of y'all are unhappy about inflation. That's what I'm unhappy about, especially as a self-employed individual. I don't like, again, $100,000 a year used to mean something significant. It doesn't mean that much anymore. And again, I make more than that. I'm not saying I make 100K. What I'm saying is like inflation should freak everybody out. Because as prices rise more and more and more and more, the ladder to wealth becomes steeper for everybody right now. And so everybody here should fear inflation much more than a recession. The only people that are really pushing are, you know, they have their own interest in mind. But we should worry about inflation going down. And the only time throughout history of finance that we actually get inflation decreasing, like literally decreasing, not slowing, but decreasing, is when we enter recessions and depressions. If I put up CPI inflation, here's consumer price index inflation over the past 20 years. Okay, you'll notice something. The only time inflation literally goes down is when we've entered into a recession territory. Like the only time it really went down over the past 20 years was 2008. Last recession we really had. That's the only time in the last 20 years that inflation has actually literally gone down, really, is right there, 2008, the last real recession that we got. And so honestly, I'm not even mad if we enter a recession. I would much rather inflation get under control by us entering a recession than the opposite effect, which is that the economy's booming and inflation spiking up more and more and more and more. I think we need to correct from the inflation that we've already got over the past 5 years. And I think really the reason most of you guys are unhappy is because you can't afford things anymore. They're 2 or 3x more than they were in 2019. That's why a lot of you guys are unhappy. And again, I'm not saying a recession is good, but it's kind of needed to a certain extent. We need to control that inflation a little bit more. And I'm for that, to be honest, regardless of anything else. Dude, this has nothing to do with a politician, bro. I dislike all politicians. It's not like I'm supporting any politician. I hate all of them, to be honest. They're all dumb to me. They're all bureaucratic. They all have or push their own self-interest. Like, I'm against all of them, to be honest. I dislike all politicians. What I'm saying is I'm looking at it from an economic standpoint, okay? Like, y'all want me to say bad, and, like, it doesn't look good. That's for sure. But I'm okay with us going. I've been saying this for years before he even got elected. Like, I'm okay with us going into a recession if it controls inflation, because inflation is the real, like, most of y'all are unhappy because of prices. Let's be real. Prices have been obscene. They're up 2, 3, 4x what they were in 2019. That's why a lot of you guys are unhappy. Let's be real here. That's why I'm unhappy. I don't like prices being high either. The only way we're really going to get that under control is entering a little recession, and I'm okay with that. Right, rip the Band-Aid off. Like, let's just rip the Band-Aid off here, you know? All right, guys. Hey, we're going to get ready to trade. Looking at our poll numbers. Look how split down the middle. We got over 1,000 votes today. Over 1,000 votes. 51% think it's only a correction. 49% think we're going to keep going down and crash. Interesting. Very split. 1,100 votes, basically. And we're basically 50-50 here. Very interesting. Interest rate hikes are the wrong way to fix it. They're making inflation worse. If you think about it logically, it costs companies more money to make things because of interest rates. Yeah, but by raising interest rates, you're pushing down the economy to control inflation. And that's the point of the interest rate hikes. I mean, not cuts. The interest rate hikes. You're raising interest rates. The logic behind all of this, guys, to understand like rates and economics and all this different stuff, right? The Fed is a balancing like entity. They want to balance things. They don't want it super weighted to one side because there's always risks if it's weighted to one side. If we're too weighted towards a strong economy where too much spending is occurring, interest rates are too cheap, we get like too much economic stimulus, inflation spikes. 2020 economic disaster, lockdowns, all that stuff. The Fed stepped in, lowered interest rates down to almost zero, sent out stimulus checks, printed a bunch of money through what's called quantitative easing. Quantitative easing is basically when the Fed creates online bank reserves, and they use those online bank reserves to buy up financial assets like bonds. This injects liquidity into the economy, and interest rates, it helps them keep interest rates down. And when interest rates are cheap, when people have cheaper access to money, they spend more, right? It stimulates the economy in that regard. But the consequence is a lot of the time inflation, right? So when people spend more, businesses are like, hey, I can raise prices because my bubble gum is selling off the shelf. Let me bump prices of my bubble gum up to 25 cents from 20 cents, and thus we have inflation. And so again, following all that economic stimulus, low interest rate environment of 2020 that was trying to save us from the worldwide event that was going on, we got inflation spiking up to almost 10%. A lot of it was due to supply chain restraints, to be honest, but that's a different story. And so once we get that, right, like once we get that inflation spiking up to almost 10%, that's when the Fed pivots to the other side of it where they say, okay, we're in mania here with spending. Let's rate hike. Let's raise the interest rates around the country. They raise what's called the federal funds rate. They do what's called quantitative tightening, which is they basically take liquidity away from those markets, reducing liquidity, and ultimately it's a more restrictive stance that keeps interest rates higher. When interest rates are higher and people have less cheap access to money, they tend to spend less, the economy gets pushed down, and overall inflation is combated that way. We're still doing quantitative tightening as well, and the next Fed meeting is next week on Wednesday, so almost in a week from now we get the next Fed meeting. But with all of this context in mind, we got CPI inflation tomorrow, and the only way the Fed is going to be willing to cut rates sooner is if inflation is under control, because if inflation isn't under control, the Fed cutting rates might actually make spending and inflation worse, not better. And so they need inflation under control before they start being what's called dovish or loose in terms of economic policy. And again, we got to see inflation come in something good tomorrow. We'll see what that looks like. It's a big catalyst tomorrow, CPI inflation. We also have CPI is consumer inflation. PPI is on Thursday. It's producer inflation. So we get both sides of the inflation coin coming out this week. And it's a really interesting catalyst because of the dynamic of big market correction that we're seeing right now. People saying we're in a recession. All the landscape of everything going on is a really interesting one. And so we got CPI tomorrow. And then on Wednesday next week, we get the Fed rate decision. Like, they're really expected to pause. And if we look at this now, I'm assuming we're getting... Yeah, so it's still at 97 to 3% likelihood of a... pause. So it's still 97% likelihood that we're not going to change rates next week. 3% likelihood that we cut rates, we bring interest rates down, but it's pretty unlikely because, again, the Fed wants to see inflation under control before they're more willing to be dovish like this. But yeah, interesting landscape right now. A lot of corrections, market drops, fear. People are saying we're starting to enter the first, like, again, we're not in a recession. We need confirming 2 consecutive losing GDP quarters first. But we might be headed towards a losing GDP quarter. That's possible as well. But again, we need 2 of them, so. Yeah. Jolts comes out at 10 a.m. The Jolts job report, which is a look at jobs, comes out at 10 a.m. Eastern Standard Time. Yeah, I love using volume weighted average price. I like using the 200 exponential as well. Like, that's what you see on this chart here is the 200 EMA. Yeah, I mean, the next rate cut that we're expecting for them to bring interest rates down is June, I believe, right? June, it actually pivots to a 25 basis point cut. Basis points is just 0.25%, right? So this is a 4 to 4.25% federal funds rate, which currently it's at 4.25 to 4.5%. So they're thinking by June, we're going to cut rates 25 basis points. May, we got a little bit of a chance of a rate cut. So the likelihood of a May cut actually has been increasing. So as of now, we have a 46% likelihood of a cut in May. So this is a little bit earlier than they originally expected, but we're pretty sure we're going to pause next week. And then they're thinking by July. They're thinking by July, we're going to have 2 rate cuts. So basically what this means here, if you want to read this chart, is it means that they think sometime around May or June, we're going to start cutting. And once we start cutting, we're going to do consecutive cuts is what this means. So we're going to do 25, probably 25. I doubt we'll do 50. But yeah, that's what they're looking like right now. So sometime in the next 3 months, we're going to start cutting interest rates again. And that's if inflation is under control. And so that's why tomorrow's CPI inflation report is important, because we need inflation under control to justify cuts. I agree with what you were saying, John. You were aligned with what Powell was saying and doing. I just think their philosophy is completely wrong. I mean, I get it. Emergency cut, 2 full points. I mean, you know, I had somebody say that we were going to do an emergency cut this week. But again, that doesn't make any sense, because an emergency cut would signal that the need to do so. And like, if we got a rate decision next week, they would just cut rates next week. They wouldn't do an emergency cut. You know, maybe you're talking about like into the future, like over the next couple months. And that's possible for sure, that we do some type of emergency cut if we get deep economic weakness. Very possible, you know. What if job openings exceed expectations and CPI is cold? A cut could come next week. Nah. Not unless JOLTS was like really, really weak. If job openings... So again, you have it backwards, Egg. You have it backwards. Your EG, I don't know what your name is, sorry. But, okay, so strength in jobs. So like more jobs openings shows economic strength, not weakness, which is an argument against rate cuts, right? The Federal Reserve is going to cut rates if the economy is weak enough to justify it. Meaning, we need economic weakness to cut rates. If not, what's the point? You know, if the economy's booming and things are good, you don't need to bring interest rates down to stimulate it. You know, you only need to bring interest rates down to stimulate it if the economy shows enough weakness to justify that. And it's not currently in that weakness. We just don't see that weakness right now. We need economic weakness first, and we just don't have it. So that's what it means. But, you know, it's nuanced. Same thing with inflation, right? Like you hear, like when I say we don't have economic weakness, and I'm not saying we don't right now, people usually start bringing up inflation for some reason. They're like, nah, bro, people can't afford things. And again, it's not the same thing. Like inflation happens from too much spending. And so if your argument that the economy is weak is that inflation is high, it's a counter argument towards what I'm saying. He could be trying to force cuts so he can refund. Yeah, maybe. Yeah, I mean, what you realize pretty quickly, everybody's all hypercritical of Jerome Powell, but dude, it's a damned if you do, damned if you don't scenario. It really is, right? Like people criticize how everybody dealt with 2020, but if the Fed didn't step in and do economic stimulus, which is ultimately what caused all this inflation, if the Fed didn't step in and do QE or rate cuts or any of that stuff, people would be even more unhappy with them, I think, right? Like they would be saying, the Fed's just sitting there and they're not doing anything. Why are we paying these guys? They would say. And so regardless, like you got to be objective about it. You know, the real question is, was it better to get it over with back then or now? Of course, in hindsight, people are going to say we should have done it years ago because years ago are over now. But it's more nuanced than that, and it's a tricky thing regardless of all of it. No, I don't think the Fed cut too early. I think they paused rates for a year straight before they cut. They only started cutting last August, and they only cut by like 1 percentage point, 100 basis points. They cut 50 back in, I think, September, and then 25 for the rest of the last year. And then they paused again. So they cut 1% and then they paused, which is balanced. I would rather them be balanced about it instead of just deep cuts. They're trying to do so without spiking inflation is what they're trying to do. All right, so we do see a bounce in Tesla, but the market's very stagnant right now. We got the opening bell in 7 minutes. I think we might get choppiness today. We got CPI inflation tomorrow. We got jolts at 10 a.m. today, 30 minutes after the bell. I think we might get choppiness to me. Honestly, today, I think we might. But who knows? If we don't have enough economic weakness to warrant cutting rates, why did Powell cut rates 75 basis points last year? Because he had already paused for a year straight. And I'm not saying we don't have enough economic weakness to justify rate cuts. What I'm saying is that the Fed did this, okay? They brought interest rates down to almost zero in 2020. If this is 2020, if this is 2020, here. They brought, and this is zero right here. They brought rates down to almost zero, and they kept them there for a few years, stimulating the economy. They did QE. When inflation started to spike, they raised rates up like this, and they kept them there for a year straight. Then now this is like 2024, late 2024 right here. Right, they kept them there. Then they started to cut rates back down. So it's a balancing act, right? I can show you the actual graph behind it if I pull it up here. Hold on, let me pull this up. All right, so here's the Fed funds rate if you look at it. All right, we got 5 minutes. Market's still turning here, guys. Wow, look at this. Hold on. Still decreasing here. Yeah, so look, so here's 2020. They brought rates down to almost zero. They kept them down there, and then inflation started to spike. So inflation started to spike right around here. Once inflation started to spike, the Fed pivoted to the other side. It started to get really hawkish, and they raised interest rates, and then they paused them for a year straight. Man, weakness showing up in markets, guys. Brutal. Yeah, this is Apple. Apple's down to 223s. See if there's any news. US FDA sends warning letter to Amazon on March 3rd over sale of unapproved injectable lipolytic drug products. This is Amazon maybe dragging some stuff down. Amazon had some bad news that came out. All right, guys, 3 minutes. 3 minutes until the opening bell. Market fear is high for sure. Y'all be careful today, man. And again, I'm not going to bring this up again. Maybe I will. I'm sure I will. But I was absolutely right. Did I not call this crash/correction? Over the last 4 months, I told you guys I stopped buying. I thought we might correct sometime soon. I thought we were too extended. The NASDAQ up 105%. You love to be right here. I'm gonna revel in this all day, man. Again, when I'm completely flat and I sell everything to get flat, and then the market corrects, it feels good, man. I'm not even saying I want the market to correct. I generally want the market to go up, but I could be struggling right now. And I know some of you guys are. I'm sorry if you guys are. But again, there's a reason I sold almost all my stuff, and I got really flat. I told you guys NASDAQ's up too much. We needed to correct. Now the question is, is this a crash or correction? We're already down over 15% now. Is this a crash or correction now? Depends on how much. If we drop to 20-25%, we're technically in crash territory. Fabio, the market opens up in a minute and a half now. Daylight savings time happened, so we lost an hour in the U.S. And it kind of goes to show you, man. Yeah, the poll was completely 50-50 split. Again, people have wildly overpredicted crashes and corrections over the last 4 or 5 years, man. I've seen it over and over again. And honestly, people have called me a perma-bull because I've been very critical of the people doing that. Because honestly, they're over-predicting it. They're trying to get views. They're calling too many crashes. Every other week, they're acting like the market's going to crash. And they've been wildly wrong over the last 5 years. And they're just doing it to get views on their videos. And I bet you half of them are going to act like they were right the whole time, even though we're well over where they called multiple crashes. But the one time I tell you guys I think the market might correct or crashes, we actually do. Sometimes you got to celebrate your wins. Maybe I'm celebrating it too much, but it feels good, man. It really does. It feels good knowing that I was actually correct about the only real market crash or correction I've tried to predict in the last 5 years at least. All right, guys, here's the opening bell. Hey, we got 20 seconds. 20 seconds, a little bit less than that. Yeah, we're going to trade at the opening bell. I'm not saying it feels good to know some people are suffering. All I'm saying is it feels good to sell most of my portfolio and then have the market dip knowing like I protected myself. And again, I was very vocal about it on stream. If you've been watching my stream, you guys know I told people I was selling, or I had already sold and I was flat, and that I didn't like buying, that the market was up too much and needed a correction. And so we were able to avoid losing on this, which is obviously good. All right, NVIDIA's still dumping down here. We're at 106.40s. Chat, 106.40s. Oh, I told you guys, y'all are never going to hear the end of this. I'm going to brag about it until the end of time. Broadcom pushing up. Amazon pushing up. Tesla pushing up. So we are seeing some strength at the opening bell. NVIDIA retracing here. I'm watching the VIX as well here. So we got the VIX on the top. We got NVIDIA at the bottom here. Look at NVIDIA fall, though. So NVIDIA has been really weak, but I'm starting to see some strength at the opening bell. Again, look, right now we're down about 15%. And so we're down about 15%. We'll see if the market continues down. If the market drops another 5 to 10%, we're in crash territory. If we rebound back up from this, it's just a correction. So I'm not laughing at pain. I'm happy that I avoided some of this drop. People have called me a perma bull so much, and a lot of them actually recognized. They were like, man, John the perma bull, if he's saying we might correct, I'm really nervous, you know. And again, y'all weren't wrong. Like, again, market's just up too much. 105% is obscene. It's never going to hold that, I think. There's too much mania that was going on over the last couple months, really, for me to be interested in buying up stuff. Yeah, they're just trying to find a way to criticize, and that's okay. You know, listen, let them try. Broadcom breaking down. Apple turning back, testing lows now. NASDAQ just cracked lows. It's down to 19.4K. VIX is rising still. VIX might break 30. VIX is a volatility ETF. As the market gets volatility and decreases, the VIX increases. Look at the VIX, 2850s. I am seeing some bounce backs, like Amazon's bouncing back. Apple's what's weak right now. Like Google's going up. Netflix is going up. Tesla just turned, though, and broke lows. So, or yeah, broke. Tesla's testing lows of the day here. Apple is too. We're very flat, guys. Again, I still think we might be flat. We got only a couple minutes. Yeah, Bitcoin down big over the last couple days too, man. Bitcoin down to 81,000. Very weak. Yeah, well, what it is, though, is you got a bunch of YouTubers that make videos. And their videos are like, this is bad. You know, sell everything now. You know, and they've made a variation of that video every 2 weeks for 5 years. You know, and they've been wrong almost every freaking time. And then when they're wrong, they find some small little dip and they say, see, I was right. And then they can continue to do it to get views. You just know they're acting like they were right about this. You know, you just know it. Even though, again, what I look at is where we're at now versus when you made that prediction. If we're above where you made that prediction, you're wrong. You know? And I'm genuinely curious to see if we bounce back too. I'm waiting to trade here, guys. I don't really like this at all. Nvidia's starting to push up, though. So that looks a little bit better. But we got to wait at least 4 or 5 minutes to pass. Yeah, I mean, I'm not really going to name them. I'm not really one of those people that, you know, attack individual channels. I'm good on that. I'm just avoiding the drama completely. But you know that they're out there for sure. 9 EMA is too short-term, gamer. It's too short-term. The 9 EMA is way too short-term of a moving average, which is lagging. You know, the only moving averages that really hold weight, in my opinion, are long-term ones. I like long-term exponential averages on a short-term chart. I think those work. Like the 200 exponentials right here. Look at how well the market follows that. But again, look how choppy we are at the opening bell. It's weird. Yeah, I'm not really talking about any individual ones. It's all good. Yeah, Nvidia's bouncing up, though. So Nvidia's bouncing up. We're kind of flat right now. Apple's rebounding back up, too. Yeah, I don't really have anything against any of them. Tony, like, I don't have anything against anybody. And again, people got mad at me, Kevin, for like selling his portfolio because he said something different. Like, but at the same time, like, dude, things change, man. Like, if I get some information that shows a previous thesis of mine has now looks bad, bro, I might sell too. Like, there's nothing wrong with that. Like, theses and trends and outlook changes. It's normal. You can't really knock somebody for it. People are just mad they lose money, and they're trying to blame whomever they can for it. Because it's really hard for people to be introspective and accept losses, I think is what it is. But it's not the person's fault. Like, you know, that's kind of how it goes. Market's variance heavy, you know. It's volatile. Random stuff happens. Can't really get mad at somebody for protecting themselves. I think that's silly. Yeah, I think markets are a little indecisive right now, but Nvidia is bouncing back some. Tesla back some. Apple back some. Yeah, we'll see if the market rebounds all the way back up here, too. I mean, it's very possible we do. All right, Tesla up there. Tesla back up to 230s almost. We'll see if it continues back up. Yeah, I'm sitting here waiting. Market's flying high right now. VIX is going down some, which is good, honestly. It means volatility is decreasing a little bit. Apple popping back up. Tesla making a move back. I'm going to wait to settle down into this before I take any positions here. We're now over the 200 exponential. We got 23 minutes until the JOLTS report drops, about 22 minutes actually. So we're getting there. I mean, it's still down massively, but it's back up a little bit today, which is good, I guess, for everything. Is gold pumping? Is it really? Gold is pumping. Gold's one of those ones where it's up on a... Here, part of me wants to buy this. Yeah, this is... look at that drop, dude. Look at this bounce right here. Let me draw some levels, to be honest. I need to draw some levels. Look at that level. See, we're kind of in no man's land where I don't even have any levels on my chart anymore. I like these. Oh, I was about to buy it. I should have. Alright. That's good enough. Yeah, look at that pop. I should have bought it. It's all good. U.S. debt purchasers poised for growth amid rising credit card balances. So we're popping up, testing this level here. I might redraw this level if we get some better confirmation in it. All right, look at this rebound back up too. Nvidia's all the way back up to 110s. I'm going to short up here. I know it's kind of risky. But I think we're going to cut that right there too. I think we might range back down some today leading into JOLTS. I might be wrong though. It depends on where this all stops. But so we got a little green here. See if we can get a little bit more edge, but see, I think Nvidia is going to start to slow. So we're short again. See, we're starting to chop back down, but it's taking a little while. There we go. There we go. All right, we just made about 50 bucks just now. We'll take it. I thought we might range back down some too. I think we got the JOLTS report today in 20 minutes, so I think it's a reasonable thesis of like, hey, we got 20 minutes before the JOLTS. Tomorrow's CPI. Leading into the JOLTS, at least we might range. And yeah, there we go. Ranging back down. Not a shock. JOLTS prediction? Oof, I really don't know, man. Again, JOLTS expected at 7.6 million. 7.6 million. So it's a big release, to be honest. It's a big report. And again, I'm on Top Step right now. So this is a 50K funded account on Top Step. Top Step gives you a demo. They test your skill with a demo account. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's $50 for the base one. They give you a $50K demo for $49 a month subscription. If you can make $3,000 in profit on that $50,000 demo without losing $2K first, following their rules and conditions, they fund you $50K with a 90% split. You get to keep your first $10K in profit and 90% afterwards. Very similar to funding your own account. If you fail, you lose $49. It's the best of both worlds. It's limited risk. It teaches you how to trade, and if you fail it, you get a practice account with real-time data, which might cost the same amount if you buy it independently from Top Step. But if you pass it, you get a lot more cool stuff with Top Steps, right? You get a $50K funded account, 90% split. You can then withdraw. If you're good enough, you can then withdraw and fund your own account. But most day traders lose, and I think that's the same here. Most day traders lose regardless of what account or where they trade. It's a lot cheaper to lose here. It's a lot cheaper to learn how to day trade and get those reps in of trading here, usually, than it is to fund thousands of your own money and lose that. Let's be honest here. But I'm biased. They're an affiliate of mine. I'm biased. I get paid by them. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. Not an investment professional. Do not copy me. I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say. Now that is out the way, look at that bounce here, bro. Look at the greatest level of all time right here at 480. Bouncing right off of it, testing the top of that range. I don't know what to do now. Again, most stuff looks kind of flat and choppy, which is not a shock. Tesla's bouncing back, but that's probably because it's hyperextended to the downside. I mean, the JOLTS report is big. We got a lot of people watching it. But whether it moves markets, nobody really knows. All right, markets are starting to pop back up. Let's watch. I'm watching this 560 level here. 560 seems to have a lot of confirmations. We'll see if it can hold over it. VIX is starting to go down some, which is good here. We only got 15 minutes left before JOLTS. 15 minutes. Netflix is popping up. Tesla back up. AMD's dipping down a little bit. Kind of flat on the day. Google's green. That's nice. SPY is completely flat, like right red. You're right in between. It's right at the neutral level at the previous closing price. When are you gonna start buying up blue chips? I don't know, man. Depends on how much more we drop. I'll probably start to DCA sometime soon, but it's going to be pretty small, meaning a very small, like I'm going to do some, like a monthly DCA strategy into some stuff. But again, it's going to be like a monthly thing where I add like a, couple shares a week maybe or something like that. It's going to be very small, but the big risks if we are heading towards a recession. Again, we're not in one yet. We need multiple confirmation reports first. But if we're heading that way, I think okay, we got to look at different possibilities here. And again, understand, I'm going to preface this. I'm certainly not super weighted to any of these possibilities that I'm about to mention. But one of them, looking at the 90s, late 90s, we had the dot-com boom, where all these internet stocks, the internet was taken off. All these internet stocks, got billions in valuations through IPOs and went on the public markets, and eventually it led to the dot-com crash, right? Reasonable technology, justifiable hype around the internet, and the internet, in hindsight, is one of the biggest technological advancements of the century. But even with that even with the validity of the internet being big, we still had one of the longer bear markets we've seen in the last 100 years following it, right? And so I think when you take that context and you put it into like AI here, AI, very big, justifiable technology, just like we got on the internet, big mania hype where it increased for years and years and years, and now we're starting to see a correction from that. If it follows the internet's path, we could have a longer term bear market. And if that's the case, you need to be a lot more selective about when you start to buy things, right? You need to be a lot more selective about when you start to buy things. The other way to look at this is that, and these are, again, I'm not super weighted to either side. I'm kind of a wait and see, data dependent approach. The other way to look at it is usually at least once a year we get a 10% or so on average correction. At least once a year, just because we need it. Most of the time the market goes up, and so usually like at least once a year we need some type of 10% or more correction just to kind of make it healthy, just so it's not up too much. You could argue that that's what we're seeing here as well, and that we end up rebounding back up and we have all this big strength. Which one it is, I don't know yet. And maybe it's neither. Maybe we see some like flat action. I know the market's ripping up right now, but it's way too early to tell. And with all the economic reports, the JOLTS report coming out in about 10 minutes, CPI inflation data coming out tomorrow, the Fed meeting coming out next week, we got the NVIDIA GTC conference, which I think you could also theorize that if we get some really optimistic things at the GTC NVIDIA chip conference, that might make the market boom and run. And so maybe this will feed some of this rebound if we do have some optimistic things for like inflation and GTC. But it's still early to tell, of course. Obviously, I'm always pretty data dependent here. And time will tell here, guys. Time will tell. We're right at the top of the range right now. Right at the top of the range. So the momentum's definitely on the upside. But the extension is definitely on the upside as well. So what do you guys think? Is this will we rebound or will we long-term bear market? What do you guys think? Yeah, we got JOLTS, 11 minutes. And again, I know I kind of bragged a lot about being right about this correction. The reason I'm doing that is because you know how many like haters I get here that tell me I'm the worst and that my predictions are horrible and this dude doesn't know what he's talking about. And so the reason I'm bringing attention to this is just to kind of show you I might know what I'm talking about, and so I hope all that makes sense. But Tesla coming up to 236. If you were me, you might do it too, But Broadcom up to 191s here. So Broadcom bouncing back. Tesla bouncing back to 235s. Netflix up to 880s. SPY up to 560s. Bitcoin at 81s. AMD at 98s. Big old correction, maybe, man. All right, guys. Hey, we got 10 minutes. 10 minutes. I don't know what to do. I don't know what to short this because we might range into the JOLTS. I don't know. Ride the momentum on the upside. I'm green on the day, but I'm kind of taking a step back here. The VIX is coming down. Nvidia's going up. Yeah, when the perma bull tells you he's slowing down, you might want to listen, guys. But they'll still say I don't know what I'm talking about just because they're big mad. That's how it goes. AVGO at 192s. The SPY at 560s. All right, we got 8 minutes left, chat. 8 minutes left. All right, we're going to start to buy. Oof, what a drop. Oof, I took a piece off just to protect it. Another piece. There we go. All right, we just made some more here. Not a ton, but we made like another 20 bucks. I'll take it. Green is good. Scalping right now for sure. What kind of number do we want with jolts? I think the market fears economic weakness. I also think the market wants rate cuts, so I think we're in kind of a nuanced place here with economic reports. But I think the market fears economic weakness and recessions. And so I think, especially with all these big, brutal red drops that we're seeing recently, I think lower than expected jolts report is going to make the market panic, depending on how low and how high it could be. But again, this is just a straight up guess. I have no freaking idea. The market could also fear inflation and want rate cuts. And so if the market fears inflation more and really wants rate cuts, we could also see a negative reaction to a stronger jolts report. And so I think it's a little nuance heavy today. I'm not really going to bet on this. I don't know what this report's going to show up as, and I don't really have a good outcome guessing the jolts report. I can maybe guess CPI sometimes, but the jolts report's a little different. Yeah, PL1, I've never seen you before ever. So listen, it's all right, bro. It's okay. You know, you're banned for life here, but it's okay. All right, guys. Hey, we got jolts coming up. We got 6 minutes left. If you look at the VIX movement, well, the VIX is going to be coming down too. Yeah, we'll see what happens. Again, I'm going to slow down my trading. We're green on the day. We're up almost 100. We'll wait for jolts to come out and then maybe try to piggyback off of that. Yeah, we got 5 minutes left, really. A little bit over 5. We got like 6 minutes. And again, I wasn't trying to bring up my haters. I was trying to tell people why I'm celebrating being right about this correction. And I think that's understandable, right? Like, I think that's understandable. All right, Google falling. See, look, we are doing that sideways choppy outcome here. Yeah, I might try to piggyback off the report. You did call it about the correction? Absolutely, bro. And again, I'm going to celebrate my wins and joke around and brag about it. Top 3 worst trader of all time, but definitely I was top 3 rightest correction predictors out there in the world right now. So you better believe I'm going to revel in this. This could be a good opportunity for people to invest if they have extra cash. It depends on whether we have like a .com bear market like scenario here. Again, the .com boom and bust had one of the longest bear markets follow it. And so if AI follows a similar trajectory, if we have a long-term bear market that follows the AI boom, you know, I think long-term it's still going to be fine. And so I think long-term we're still going to have like green. I think long-term we're still going to have an edge buying now as long as you're willing to hold it long enough. But I'm certainly not telling you to buy it because you might get stuck in a long-term down bear market too. That's possible as well. Again, this is why I always try to say like DCAing is your friend usually with stuff like this, right? Like dollar cost averaging is certainly your friend here most of the time. And so as long as you can have the you know, the money to keep adding to it, if you hold it for a decade or two, you're still almost certainly going to make money. But I'm not an investment professional. Don't copy me. Definitely top 3 worst braggers in the world right now for sure. John, you should celebrate your wins more. I don't think anybody here wants me to celebrate my wins more. Usually the people mad about it are just mad because they probably had the opposite prediction, you know. They turned on the sell algo. Yeah, I think we got a lot of recession fears right now, man. I think the market might fear recession. We're not in one. Please don't tell me we're in one because we're not. You need 2 consecutive losing GDP quarters. Even if GDP is a lagging indicator, the last quarter was not losing. And so we might be starting one, but we're certainly not in one now. We need 2 consecutive losing GDP quarters for a recession. Broken records of all time for sure. Listen, that's what I'm here for. Hey, guys, we got 3 minutes left. 3 minutes. We're expecting right now... for the jolts report, we are expecting 7.6 mil. Let me put a different one up. Hold on. Let's see what they're. Yeah, 7.65 million is what I'm looking at for jolts. What number do you think we show up as? We got 2.5 minutes left. 3 minutes. Party at your house, you're saying? Definitely not a party at my house, bro. AI is not even close to a bubble yet. Nvidia is definitely not at 35 PE. Nvidia is at like what? Like it's like 100 and something PE. Actually, I think Nvidia, let me see what Nvidia PE is. The way you calculate PE ratio is you add up the last 4 quarters EPS and then you divide that by the share price. So Nvidia being right now at 110, I could just ask AI this, but I'm going to ask it. Let me ask a different one. The PE ratio of Nvidia is 36 right now. You're not wrong. It is 36. Honestly, it's not bad. I mean, it's not great. It's not bad either, though. And this is well below Nvidia's average PE of 51 over the last 10 years, right? Now, this is a little bit out of context because of the AI boom, but you're not wrong. Nvidia's PE ratio is not really bad right now. And again, PE ratio is price to earnings. We got a minute and a half before Jolts, chat. A minute and a half. Bring back Carol. I love my wife, but she's just too soft-spoken. Carol was like, you know, when you had to read a report in front of class and like you get really nervous, so you talk really quietly and you like speed read the report. I love her, but that's what she did. You know, she did a great job though. All right, guys, we got 1 minute left. All right, guys, we got about 1,500 watchers right now. Let's see what the Jolts report shows. $7.65 million expected. 7.6, 7.65. All right, we got a range. Let's see what it does here. All right, we got Nvidia up on the right side. I'm going to put gold up on the top as well. Here's gold. Gold's been testing highs of the last couple weeks as well here. All right, guys, 20 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. Yeah. All right, guys, 5, 4, 3, 2, 1, and here's the report. Man, dude, my timer was exactly right. Jolt showed up at 7.74 million. Stronger economy than expected at 7.74 million versus 7.6 million expected. Higher than expected Jolt's job opening report. So this shows a stronger economy versus a weaker economy. Again, 7.74 million for Jolt versus 7.6 million expected. This shows a stronger labor market than expected jobs. This is more jobs than expected. Again, I would expect this to make the market go up because this shows a stronger economy in the wake of fear and uncertainty right now. And again, so far we have reacted somewhat positively to this. Look at the market go up on this report. Again, Jolt's report showing up stronger than expected. 7.74 million versus 7.63 million expected. Much stronger than expected here. And yeah, the market's going up as I said it would. Again, I told you guys I thought the market feared a recession, and so a stronger economic report might make the market go up and a weaker economic report might make the market go down. There is the numbers in chat. I'll put this up on screen. Again, sometimes the first move is the wrong move, so I could certainly be wrong here. We'll see if I am. But so far, market's going up on this report. It's strengthening the market, not weakening it. So, market likes it. You said both? Well, I definitely did say both. I said either one of them could happen, but I was definitely more weighted to recession fear in the market. If you listen to the stream or like all day today, I was definitely more weighted towards this outcome, but it's still a little early to tell whether this outcome is right. Sometimes the first move is the wrong move, and so sometimes we will go up and then turn and come all the way back down. And if we do, I was wrong about it, right? Which is kind of what we're doing right now. So again, I could certainly be wrong. Yeah, where's yields going here? That's where we want to see interest rate sentiment. Yields increasing right now, which means a higher interest rate sentiment, which makes sense because Jolts was stronger than expected, so yields are going to go up because it means a stronger economy than expected, which means less need to cut rates, higher interest rate sentiment. Yeah, I mean, we're kind of flat right now at this point in time, though. We're basically right where the report came out. Now we're turning back down. So it looks like I was kind of wrong here. But it's still too early to tell. We are on the day ahead of CPI inflation data, right? So we are ahead of CPI inflation data. Look at the yields dump here as well, guys. Wow. So, interesting. Yeah, definitely. Carol is definitely one of my top 3 wives ever, you know. Definitely in the top 3 for sure. I would say definitely the top 2, but like, you know, 2.5 might be more reasonable. All right, guys, we're turning down. Looks like I was wrong. Let's see if it holds. Last month revised a lot more than beat this month. Look at the market turn here. Stronger economy, bad. Yeah, honestly, if the market is reacting like this, I was definitely wrong. I thought the market would want a stronger economy because of it. Recession fears that I'm seeing really reinforced a lot in chat as well. But I also think maybe like ahead of CPI inflation data, the market wants rate cuts. Right, so another story that you hear from chat, which seems to be the right one now, and again, I don't freaking know, I'm not an investment professional, but the market wants rate cuts. And what does stronger economic data mean? It means less likelihood for rate cuts, and now the market is falling here. So first move was the wrong move, and I'm definitely wrong here. I mean, listen, we all got to be wrong sometimes. And definitely top 3 most wrong trader betting on the reaction of JOLTS job report in the world right now. Yeah, again, I think that's what it is. I think people want rate cuts. That's the only thesis that makes sense, right? Like, people want rate cuts. Stronger economy data means less likelihood of rate cuts, more inflation problems. And leading into CPI tomorrow, man, look at this turn. Wow. Market really turned on this report. Now the question is, okay, so this is my big question now. Does the market stay choppy at this point in time? At this point in time, we've had a big range up, a big range down. Now what? If we stay choppy for CPI, which is very possible, the market might come back up now. If that's the case, we got a huge range and a big choppy action market ahead of CPI inflation data, which is really what we probably will get. My face isn't really super red. Really what it is the screen I'm looking at. So like if I change this screen, like look. Wait, where's the screen? If I change the screen, see it darkens. So it's just the screen I'm looking at. I mean, I'm definitely the top 3 reddest face trader in the world right now. But yeah, it's just the screen I'm looking at. What I'm really wondering is, should I buy this? I can't justify it in my mind. It's crazy to me that the market makers in the world are so irrational. I'm definitely one of the smuggest traders of all time. Yeah, no, I've said it before. I'll say it again. Sometimes I have these screensavers is what it is. So like I'll have the screen protector that protects my eyes, and it's a little orange tinted. And so, all right, guys. Hey, JOLTS report making the market panic. We also had a report come out that also could be. I see somebody, they might be right. They're saying the president just announced more tariffs. So again, more tariffs is actually the news right now. So I see a quote from the current president. Oh my gosh, dude, what a ridiculous quote. It says, "Oh, Canada, placing a 25% tariff on electricity coming into the U.S. I have instructed my Secretary of Commerce to add an additional 25% tariff to 50% tariff on all steel and aluminum coming into the U.S. from Canada," end quote. Sheesh. Again, we are bouncing right back, like I said. So, like variance from CPI is what this seems like. But I think this also definitely made the market drop at least a little bit on top of JOLTS. Yeah, what a ridiculous. Hey, and listen, if you want to help support your boy here in this channel, check out Top Step. Listen, I'm definitely the top 3 most wrong trader of all time in the world right now. And when I sit back and I, ponder my life, I question, how could I be so wrong about everything? And so listen, if you want to help support me and kind of help me feel better about this, check out TopStep. They're an affiliate of mine. I get paid by them. If you want to help support me, you can check them out. TopStep gives you a 50K demo. If you want to learn to day trade, do not fund thousands of dollars into your own account and lose that. Most day traders lose. Most day traders do exactly that. It makes no sense. Instead, try a funded account program. You still learn how to trade under pressure. They give you a 50K demo. It's $49 a month. If you can make 3K in profit without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split, and you get to keep your first 10K in profit. That's similar to funding your own account, but if you fail, you're out $49. You also get a free practice account after you fail your account. If you do fail, you can trade a practice account, learn that way, and if you were going to pay for a practice account outside of all this, it would cost maybe the same, similar in the ballpark at least. And so the value is there. They've paid out almost $200 million since 2020. They fund thousands of traders. Day trading the futures market is very similar to day trading stocks. No PDT in futures. You can day trade the S&P, the Dow, the NASDAQ, the Russell, gold, some currencies. No PDT rule. Patterns are very similar. Day trading is very similar to stocks and futures. And so again, if you want to check them out, I'll put this link up. It's a great way to help support the channel. I'm definitely one of the top 3 most biased traders of all time ever in the world. Understand CFTC 4.41, hypothetical or simulated performance have limitations. And remember, I am terrible, have no idea what I'm talking about. Sometimes I trade and lose off stream, and you're not going to see it. It's entertainment only, not an investment professional. Understand CFTC 4.41. Here's the link right there. Check it out. Great way to help support the channel. And yeah. Look at the market bouncing back up here. Yeah, honestly, a 50% tariff on steel and aluminum. That's again, I don't know what to say about that. That's hot. That's a lot. Honestly, the market's popping right back up, which means, as I said about 5 minutes ago, we're in a big range sideways market leading into CPI inflation. CPI inflation tomorrow is going to tell the real story of where we're at, rate cut wise, economic wise, recession fears wise. Like, that's going to tell the real story of CPI inflation data. Yeah, it's kind of risky right now to trade. I'm green on the day on this account. I'm red on the other one. But, man, what a ridiculous market this is. Again, I'm not saying I agree or disagree with anything, but this is certain to cause volatility. And honestly, the market might have reacted positively to jolts. And then at 10:02 when this report dropped was right here. So, like, look at this. 10:02 happened right here. And so this tariff announcement's probably what dragged the market back down. But who knows? Maybe I'm just trying to be right, which is definitely possible. Everything else is kind of flat and choppy. AMD very flat, Nvidia very flat. Gold's pushing up, though, which is understandable. And Nvidia's still green on the day, at least. Yeah, I'm certainly not saying we crash. I mean, a crash would only be another 5 or 10% drop in markets, technically. We're already down 15% in the NASDAQ, so a crash isn't that much farther than where we're at now. We're already in a correction. So in the midst of a correction, it's not rare for people to predict a crash because we're already in the midst of a correction. I don't know whether we do or not. I don't know. Depends on what tomorrow's report shows, Thursday's report shows, and then next Wednesday's report shows, as well as the GTC Nvidia conference. I will try to buy this down here, but it's kind of a risky thing. We'll add 2 down to the support level, see if we get a little pop. Definitely a risky time to buy, though. There we go. So we actually lost a little bit on that trade, but it's less than we would have lost it if we keep breaking down. Let's give it a second, but what a drop. We're still green on the day, but man, that was a drop for sure. Crazy Bitcoin chart. Where's Bitcoin at? Yields are kind of spiking up and down too, honestly. I mean, the choppiness, like you could see increased liquidity in Bitcoin, but it's still pretty flat. Yeah, we're super choppy right now. I don't know what to do here with this, to be honest. I'm trying to stick around and play with it, but man. We're so kind of neutral here. I was gonna short this level, but I didn't. I should have. Look at that. I don't know what CPI. Like, I'll predict CPI tomorrow. We're on a roll for CPI too, man. I've gotten most of them right, but again, I do think I've gotten really lucky, to be honest, with my CPI prediction. Somehow I've gotten the last like 8 out of 10 correct. Which I got the last one right too. Again, though, it feels like I'm just guessing it in my mind, you know. So we'll see what it shows up as. Yeah, it's kind of back and forth. I usually base it off of levels and range, but right now we got a big range going up and down. If we go another 20%, yeah, I mean, if we drop 20%, I'm buying. That's 35% down. Like, I'm gonna buy for sure. If we drop another 20, that's a huge 35% dip in markets. I'm definitely gonna buy that. Look at this drop right here, guys. Wow. I was gonna buy this level too. See, look at this level hold as well. It's too late now, though. I just don't know if there's much like edge right now attacking this. I think there's a lot of range and choppiness. Let's see what the rate expectations are now, to be honest here. I'm curious. Still 97, hasn't really changed. Yeah, so it's still 97 to 3% likelihood that we're going to pause rates next Wednesday. Remember, we got the Fed meeting next Wednesday too, which is a massive report. In all honesty, it's a huge report. Yeah. Yeah, he did it right around the JOLTS report, which is even funnier, you know. Fed Bowman is said to be the front runner for vice chair of bank supervision, according to the Wall Street Journal. There's a 5.6 magnitude earthquake that hit Peru and Brazil. Hey baby, how you doing? No, I'm still trading. Huh? Yeah, I'm streaming. Yeah, there's a lot of stuff coming out. Not long. All right, guys. In 1930, there was a trade war. Yeah, again, I'm very light right now. I'm green, but it's small, and I'm just not super confident right now in any of this. Bros before. Yeah, y'all are my homies, man. Y'all are my online friends, my internet friends, guys. Most of y'all. Fed's Bowman is said to be the front runner. Yeah. Whales don't want retail to ever win. Yeah, but that's kind of how it goes. CPI inflation data, chat. That's going to be a crazy report. I would say let's buy the dip and ride it back up if we're a sideways range, but I also think that the momentum over the last couple days at least is certainly more weighted to the downside. And so the downside can be like an elevator where a stair step is on the upside. And so there's a negative edge going long in this market right now, I think. But if we look at the context of just intraday, the trend is sideways. I just don't want to get stuck in more breakdowns. Yes, there's always a loser on every trade, you know. And there we are bouncing back some. So yeah. Yeah, so there's the back. I mean, we're in this range. This is the range right now. It's pretty simple. It's up, down, up, down, up. Not really big edge there, but we are getting sideways. Again, CPI's tomorrow is the context of it, right? Like, we got CPI tomorrow. That's a big report. And so again, I'm just kind of trading light. Looks like we're bottoming. No, I don't think this is enough to say we're bottoming yet. I think we got CPI inflation data tomorrow. And so a lot of the time traders are more apprehensive ahead of big economic reports because of the variance that we get, the higher variance that we get from these reports. Yeah. I'm trying to stick around for you guys and chill with you guys right now. But tomorrow's the day, man. CPI inflation tomorrow. Big report. Next week's the Fed meeting, so. Here, let me post about this. All right, so my levels seem to be working pretty well, though. This 480 level and then this 420 level down here seems to be working. So again, today the president directed the Commerce Secretary to increase tariffs on steel and aluminum imports from Canada by an additional 25%, bringing the total tariff rate to 50%. This decision was made in response to their electricity price hikes affecting U.S. states. The new tariffs are set to take effect tomorrow on Wednesday. The announcement led to a decline in U.S. stocks, reflecting investor concerns over escalating trade tensions. And so again, economists like Larry Summers have expressed concerns that these tariffs could increase the likelihood of recession due to potential price hikes and reduced demand. The U.S. Department of Labor released the JOLTS report for January, indicating an increase in job openings to 7.74 million, which is up from 7.5 million in December. It suggests that the labor market remains robust. There was a decline in layoffs during January, signaling employer confidence in retaining staff. Hiring trends, while job opening increased, hiring saw a modest uptick, and the number of workers quitting their jobs remained relatively stable, indicating sustained labor market stability. Despite the positive indicators, there are concerns that the ongoing trade tensions and potential government spending cuts could lead to an economic slowdown. The Fed is anticipating to maintain current interest rates next week on Wednesday. We'll see what happens. This is big. We'll see what happens, guys. Yeah, and again, we're going to make a post about all this stuff going on. Again, give me a follow on x.com if you want a one-stop shop for updates on all this stuff. We cover JOLTS reports, job openings, labor markets, economic data. So, yeah. All right, so again, here's that post if you want to see it. Here's that post. Give me a follow on x.com. And again, I'm going to cover this one more time. Look at the market starting to flush down. So there's the post on X right now if you want to see it. Market starting to flush down and crack lows here. Continuing down. Give me a follow there. There's the latest push. And market's starting to turn right now, guys. Canada files for USD bond size undisclosed according to an SEC filing going through right now as well. Yeah, the JOLTS report is out. We showed stronger job market than expected, a stronger labor market than expected. Yeah, no, I'm going to... Again, if you want to check out Top Step, great way to help support your boy here on this channel. Top Step gives you a demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. The base one is $50. Great way to learn day trading because it gives you a structured place that you have to follow rules. You learn to trade under pressure. You're still risking something, but it's not the full extent of risking thousands of your own money and probably losing it like most day traders end up doing. In this case, the base one's $49. You can also pay for more expensive ones that get you more funding. And so, you know, again, a great way to learn how to day trade. Most day traders lose, and that's probably the same here. But it's a lot cheaper to lose here than it is to risk thousands of your own money and probably lose it. In the futures market, very similar to day trading stocks. I am up a little bit today. Zero commission on Top Step X. If you go through my link, sign up to Top Step X, zero commission. And there's the link right there in chat. Remember, I'm not an investment professional. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. So the market just tapped these lows. And, yeah, we'll see what happens. John, you remind me of the scene in There Will Be Blood when he tries to close a deal with the locals and talks about his family. I mean, I guess. I'm not really talking about my family. If anything, the only thing I said to my wife was she seemed like she was reading a report in front of class. So if anything, it was like me kind of joking about my wife. Listen, guys. I'm just a family man here, okay? Living life on these YouTube streets. Don't judge me, okay? I've got a family here, you know? Like, come on now. You'll be all right. Yeah, this is like the 4th plug I've done all day, so I'm going to get out of here. Hey, I love y'all. Y'all have a great day. I'll see you guys later. Y'all be good. We're green on the day, but the market's flushing down here. Nvidia's down at 106. Honestly, it's a great movie. I love that movie too. But yeah, listen, guys. This is like the 4th plug we've done all day. We've done 4 plugs in what, 4 hours? Plug an hour, you know, you'll be all right. Hey, I love you all. You'll have a great day. Y'all be good. I'll see you guys later.